Welcome and thank you for standing by. At this time, all participants are in a listen-only mode until the question and answer session of today's call. After the presentation, we will conduct the question and answer session. At that point, if you would like to ask a question, please press star and then 1. This call is being recorded. If you have any objections, you may disconnect at this point. Now we'll turn the meeting over to your host, Paula Sampson. You may begin.
Hi, hello everyone, and welcome. I'm Paula Sampson. I'm the Acting Program Manager for the Capital Magnet Fund. And thank you so much for taking the time and being with us this afternoon. Joining me are Eddie Sobolewski. Eddie is our Associate Program Manager, and Sarah Henley, and she is I'm trying to remember your title, Sarah, Program Manager. No. Well, anyhow, you're the administrator, I guess. I apologize for that, Sarah. So, at any rate, welcome everyone, and this is a seminar on the Capital Magnet Fund application process. This particular one has a focus on those of you who are financing entities. But if you happen to be developers, please stay on the line. Most of the information is applicable to both developers and to financing entities and CDFIs. And so I think you'll learn a lot from this session regardless. So next slide. This is the agenda for today, and I'm going to begin by giving you an overview of the Capital Magnet Fund. For those of you who might not be familiar with CMF, it was established through the Housing and Economic Recovery Act of 2008. We call that HERA. And CMF provides competitively awarded grants to either certified CDFIs or eligible nonprofit organizations. And the purpose behind CMF is to attract private capital to increase investment in development, rehab, preservation, and purchase of affordable housing. And both homeownership and rental housing are eligible for the program. And our focus is to target on low, very low, and extremely low-income families. A portion of CMF may also be used for economic development activities, and these are activities designed to stabilize or revitalize areas of economic distress. Next slide. There are a number of resources available to you if you are applying for the Capital Magnet Fund. On the CDFI Fund website, and we have a CMF web page, and you can find the CMF pre-round outreach presentation that we did in June of this year. That will give you a really good basic overview of the program if you're not familiar with it. There are also 6 modules on that web page, and these provide an overview of key program requirements and topics. It's a really good idea if you can take a look at these modules if you haven't already. And they cover things not only about the introduction to the Capital Magnet Fund, but also eligibility, our program requirements, leveraging and attracting capital, how to put together a good strategy, affordable housing, economic development. So if you go to our webpage at www.cdfifund.gov/CMF, you'll find this information, and then if you go to Step 2, Apply, that's where you'll find the module. Next slide. So the topic of most interest to you, of course, is 2021, this round, and looking at our CMF priorities for this year. We continue to have leveraging private capital as certainly an important priority. If you are doing rental housing, there are 2 priorities. One is rental units that are targeted to very low-income families. These are families at 50% AMI and below, and rental units that are located in either areas of economic distress or new this year to located in high opportunity areas. I also want to note that if you are serving those at very low-income families, if you're committing to 45% or more targeted to very low income, your application will score more favorably. Now, if you're doing home ownership, the priorities are home ownership units that are targeted to low-income families. That's 80% AMI and below, and those located in areas of economic distress and targeted to eligible income families. So this year we saw a need for more income diversity for home ownership in AEDs, and so if you are serving up to 120% AMI in these areas for home ownership, you will be scored more favorably. And we're looking for 100% of units targeted to low-income families or located in AEDs, and those applications will score more favorably. We, of course, always priority is geographic diversity, not only areas of economic distress, but we want to make sure that we're funding applications in metropolitan as well as rural areas. And every year we designate areas that are somewhat underserved, that we haven't been funding them in the recent rounds. This year there are no states in that category, but there are some territories: American Samoa, Guam, the Northern Mariana Islands, and the U.S. Virgin Islands. So our NOVA was published on September 10th, and there are a number of changes and items that I'd like to highlight for you. Most important, there's more funding available this year. We have twice the amount of funding that we had in our last round and more funding than we've had in any prior round. We think that increased funding is bringing more opportunity for everyone and for organizations of all sizes. The minimum award amount still remains at $500,000, but because we have more money this year, we anticipate that larger awards will be made than we've been able to do in past rounds. New this year are high opportunity areas. This has been added for a rental housing priority, and we'll get into that a little more in a little bit. Again, incomes up to 120% AMI for home ownership in areas of economic distress are a priority. Our income targeting scoring, I think, is a little more clarified in this NOVA. And for 2021 recipients new this year, up to 15% of your award may be used outside your approved service area. This gives you the advantage of taking advantage of an opportunity that you might not have anticipated when you originally submit your application. Also new this year, affiliated organizations are now allowed to submit separate applications. This is new. There are many rules around this, so if you plan to submit an application and you have an affiliate who's also going to submit an application, you'll want to look very carefully at the application instructions and the NOVA related to that. This year, because we anticipate larger awards, awards may be requested in 2 payments, and that by doing that, it extends your 2-year commitment deadline. So that's completely optional, but it does extend your commitment deadline, but it does not change the disbursement and the project completion deadlines. Also, based on your track record, your strategy, CDFIs now can select either an entity approach, either as a developer or as a financing entity. That had been available to developers in the past. New this year, it's available to CDFIs as well. Next slide. And now let me turn it over to Eddie, who is going to talk about eligibility and the CMF applicant approaches.
Thank you so much, Paula, and thank you all for joining us today. We're really excited to walk you through the application webinar. So before I get into eligibility, just wanted to mention a few housekeeping items. First of all, this presentation is being recorded, and we expect to upload the recording as well as the presentation slides within a day or two. Also, last week we hosted an application webinar for applicants with a developer approach. That recording as well as the presentation is also on our website. And finally, there's an AMOS demonstration that a recording and slides that we did a few weeks ago. That's also on our website. If you go to cdfifund.gov, select the CMF program, and then go to step 2, you will find all of those webinars saved there. So and then one last item I wanted to mention is we do have a Q&A feature at the bottom. So if you have any questions, you can type in your questions. We'll have some time at the end. We can also open up the phone lines for Q&A. We will cover a lot of information, so you may want to hold off before you ask your question, as it could be covered in the presentation. So with that, I'm going to cover the eligibility for CMF. So to be eligible for CMF, for a CMF award, an applicant must either be a certified community development financial institution, or CDFI, and it must be certified by the fund by the date that the NOFA was published in the Federal Register, which was September 10th. And also, it has not been notified by the CDFI fund that its CDFI certification is in default or has been terminated. Or, alternatively, if you're not a CDFI, you can be a nonprofit organization with a principal purpose of the development or management of affordable housing. So please note that a housing finance agency or authority may be eligible to apply depending on state law. An HFA must be exempt from federal taxes. If you're in that situation, please reach out to the CDFI fund and we'll provide some additional guidance on this. So there are two ways that an applicant can be eligible for a CMF award. You can either be a certified CDFI, or you can be a nonprofit organization with the principal purpose of development or management of affordable housing. So in addition to that, all applicants must have been in existence as a legally formed entity for at least 3 years prior to the application deadline. All applicants must also submit audited financial statements for the 2 most recently completed fiscal years as of the date of the NOFA. So let's talk a little bit about eligibility requirements for affiliates. So as Paula mentioned earlier, in this round, affiliates are able to submit separate applications. This is a change from previous rounds. However, please note that affiliates that will play a role in executing the applicant strategy cannot apply in this round. Each applicant must propose a substantially different strategy than its affiliates applying in the same funding round, and each applicant must also present a distinct project pipeline and rely only on its own track record. Also, it's important to emphasize that any applicant and all applicants must be eligible on their own behalf, and they cannot rely on other organizations for eligibility purposes, including affiliates. And collectively, all affiliates may not request more than 15% of the total amount available for the funding round. Okay, so there are some additional eligibility requirements that you should be aware of. Certified CDFIs and qualified nonprofit organizations that are not eligible for a CMF award include any 501c4 organizations that engage in lobbying activities. So you can be a 501c4 as long as you don't engage in lobbying activities. If you do engage in lobbying activities and you're 501c4, you're not eligible to apply for this round. You're also not eligible if you have defaulted on a CDFI fund loan within 5 years of the AMOS application deadline, and if you have been notified by the CDFI fund that you are non-compliant or in default with a prior CDFI fund award. That also makes you ineligible to apply. Okay, so we talked about the two different types for eligibility, certified CDFIs and also eligible nonprofits. So in addition to the two eligibility types, there are two entity approaches. The first one is a financing entity approach, which is what this webinar focuses on. And the second approach is affordable housing developer/manager approach. And this was the webinar that we hosted last week, and you can access it on the CDFI Fund's website. So please know that for this funding round, all applicants, CDFIs and nonprofits, will be able to select whether they're applying using a financing entity approach or an affordable housing developer/manager approach. And as I mentioned, this presentation really focuses on the financing entity approach. The other presentation can be accessed under step 2. There's going to be a link to the recording and to the slides. Okay, so let's talk a little bit about which CMF application approach to use, which one is right for you. So each approach is defined in the NOFA as well as the application instructions. The financing entity approach should be selected by applicants that intend to use the CMF award to make arm's length loans and equity investments to individuals, families, and project sponsors for affordable housing and community or economic development. So most CDFIs will select the financing entity approach. Affordable housing developer/manager approach should be selected by applicants who have the construction, development, redevelopment, preservation, or management of affordable housing as a predominant purpose. Please note that an affordable housing developer or manager may own the housing that is developed, may own it in part, such as in a limited partnership. It may sell the housing that it develops once completed in case of single-family housing, or it may sell and continue to manage the housing if it's rental housing. It's important to emphasize that applicants should choose their entity approach based on the track record and the proposed capacity in which the applicant will be acting to implement and execute the award. Applicants will be evaluated based on the entity approach selected. For example, if a CDFI selects the financing entity approach, it will be evaluated based on its financing track record and vice versa. So in AMIS, before you create a CMF application, you will need to enter or validate the entity approach field in the program profile section. This is an important step because a number of tables will be generated based on the financing entity approach that you select. So make sure that it's correct before you create a new CMF application. Okay, I'm going to turn it over to Sarah, who will walk us through CMF program requirements.
Great, thank you, Eddie. All right, I'm going to go to the next slide. First, we're going to talk about some general CMF requirements and limitations. So the minimum award request is $500,000, and by statute, the maximum award amount is 15% of the total CMF amount available for the FY 2021 round. And keep in mind, as Eddie mentioned earlier, that 15% cap also applies to affiliated applicants as well. So in past rounds, the CDFI fund has typically provided awards significantly smaller than this 15% cap. For example, in FY 2020, awards range from $750,000 to $8 million, but the statutory cap was $26 million, and the average award was $3.7 million. Given the larger amount of funding we have available for the FY 2020 CMF round, $380 million, compared with the FY 2020 round, the CDFI fund anticipates providing larger award sizes under this funding round. A core part of our program is that CMF recipients are required to leverage their CMF award at a ratio of at least 10 to 1. and each CMF award must result in eligible project costs, which means the CMF award dollars plus leveraged costs, and an amount that equals at least 10 times the amount of the CMF award. So for an example, and if an applicant is requesting a $1 million award, it would need to leverage another $9 million, resulting in a total of $10 million of eligible project costs. Next slide, please. So within those leverage costs, there can be both private and public leverage sources. And these sources of capital may be loans from banks, program-related investments from foundations, low-income housing tax credit or LIHTC investments, funds contributed by the recipient itself, state or local government, or any number of other private or public sources. In the application, you'll need to show which of these sources are either public or private. So let's talk a little bit more about how we define each. Public sources of leverage are typically grants, loans, or awards made to the applicant or project with funds that are allocated by federal, state, or local governments. Please note that cost financed and supported by the recipient's award or allocation from another CDFI fund cannot be counted as leverage costs for the CMF award. And then for private sources of leverage, these generally refer to investments or loans from third-party entities. Examples include private activity bonds, LIHTC equity and other equity investments, lines of credit, loans, or other investments that are made to the applicant, or projects from private sources such as banks, private investors, or philanthropic entities. And for a regulated depository institution, deposits are also considered a private source of funds. Next slide, please. Great, and then so again, within those leverage funds, we've talked about public versus private, and then there's also 3 different ways to leverage the CMF award: enterprise level leverage, project level leverage, and reinvestment level leverage. So first, let's talk about enterprise level leverage. This refers to capital that's earned, borrowed, or raised by the applicant, which is designated for the applicant's use and ultimately used to pay for leverage costs, but it is not initially restricted for use for specific properties at the time it's earned, borrowed, or raised. Enterprise level leverage can be either public or private, and examples include program-related investments, loans from third parties, and organizations' own contributed capital, which can be equity or retained earnings. Second, for project level leverage, this is capital that's raised or earned that is restricted to a specific project at the time it is raised that will be used to pay for leverage costs. Examples of this can be mortgage secured by the property, proceeds from the sale of bonds, equity investment raised through LIHTC, deferred developer fees, and loans and grants from local and state government made directly to a project. Next slide. And finally, reinvestment level leverage. This refers to the redeploying of repaid proceeds of the CMF award dollars and or enterprise level capital during the 5-year investment period. The recipients have the option to count reinvestment leverage to meet their total leverage multiplier, but there is no requirement to use a reinvestment strategy to reach your leverage goals. The reinvestment of CMF principal and or equity repayments, also known as program income, into eligible activities is required during the 5-year investment period. We should only include projected reinvestments for projects that will be completed within that 5-year period. So if your business strategy will generate CMF program income during the 5-year investment period, for which you plan to reinvest and count as leverage, you should definitely note that in your application. This can be the case when the CMF award is used for short-term financing needs, such as pre-development, and will be repaid during the investment period and redeployed to another project. Next slide. So now let's turn to investing in affordable housing and how the different types are for the CMF program. So the CMF award can be used to finance both rental housing and home ownership. And rental housing can be multifamily, more than 5 units, or single-family housing, 4 units or less. And while most rental housing is developed as one property, scattered site development is also permitted. For home ownership, this is usually single-family housing, but home ownership may also include single-family detached, condominium, cooperative, and manufactured housing. To give some examples, some recipients have used CMF awards to make direct mortgage loans, to purchase homes in order to sell them, to qualified home home buyers or to establish a loan loss reserve for loans that they have made using their own capital. Next slide. So here are the core eligible activities for using your CMF award. First, to capitalize in an affordable housing fund. Second, to capitalize a revolving loan fund. Third, to capitalize a loan loss reserve. Fourth, to make risk-sharing loans. Fifth, to provide loan guarantees. And sixth, to capitalize a fund for economic development activities. One thing to note here is that recipients may not use more than 30% of their award to finance economic development activities if that is requested in your application. And then finally, direct administrative expenses. No more than 5% of the CMF award can be used for direct administrative expenses. Next slide, please. I'll talk a little bit about what we consider an economic development activity. This includes the development, rehabilitation, preservation, or acquisition of physical structures that house community service facilities, for example, daycare centers or health clinics, or neighborhood-based businesses, for example, the revitalization of a commercial block. An EDA must be undertaken in conjunction with affordable housing, and it must be a part of a concerted strategy, meaning a plan adopted by a local jurisdiction or the state. And again, recipients cannot spend more than 30% of their CMF award on economic development activities and must request this as a part of their application. Some examples resulting from EDAs include daycare centers and schools, grocery stores, health clinics, rehabilitation of dilapidated commercial property, and or community centers. There's a couple restrictions to keep in mind. Specifically, providing loans to businesses is not considered an eligible economic development activity, and a facility that's part of a residential property and limited to only those residents rather than the broader neighborhood, for example, a fitness center inside an affordable housing development, is not considered an eligible EDA. Next slide. Now let's turn to the requirements for affordability within the Capital Magnet Fund program. First, and you've heard Paula talk about this at the beginning, that income limit, or what we consider eligible income. That's the maximum income level for a family may not exceed 120% of the average median income, or AMI, for units financed with eligible project costs. And with the percentage of costs, 100% of those total eligible project costs must be attributable to units that are restricted to families at incomes of 120% AMI and below. And the second sentence I really want to emphasize, because we have received questions on this, is that greater than 50% of the eligible project costs must be attributable to units that serve low, very low, and extremely low families at or below 80% AMI. So again, greater than 50% of those eligible project costs must be attributable to units that are for families low income and below. At the project level, to qualify for affordable housing, at least 20% of units in each multifamily rental project must be affordable to and occupied by low-income families, again, 80% AMI and below. And at the portfolio level, applicants will indicate the percentage and income levels they intend to serve in their application and will be held to that if selected for an award. However, this is measured portfolio-wide and across all projects financed with a CMF award and not project by project. And one note here, committing to a greater percentage of units for low-income families for home ownership and or very low-income families for rental is encouraged. Next slide. For the long-term restrictions, each project funded must ensure affordability for at least 10 years. For rental housing, this is accomplished through deed restrictions, land covenants, or other mechanisms which survive sale and transfer during the affordability period. For home ownership, the recipient must develop its own plan for achieving this 10-year affordability in the event of resale. For rents, rents control affordability, and rents are set using a formula similar to that used for the low-income housing tax credits or LIHTC, and you can refer to our interim rule for additional information. And then finally, home ownership cost limits. The purchase price limits for home ownership are capped at 95% of the median purchase price for the area as determined by HUD. Next slide. One note here on combining CMF awards with other CDFI funds awards or allocations. A CMF recipient that has awards or allocations from another CDFI fund program may use a combination of the CMF award and those other awards for the same property, but only in different phases of the project's development. And the phases are defined as 1, pre-development, 2, acquisition, 3, site work or pre-construction, 4, construction or rehabilitation, 5, permanent financing, and 6, bridge financing between 2 or more phases. And then costs that are financed by awards from other CDFI fund programs cannot count as leveraged costs, as we talked about before. And then awards funded or received under any CDFI fund program may not be used to pay principal, interest, or other costs relating to the CDFI bond guarantee program. And for additional information on this specific prohibition of combining awards, see Part 2C of the NOFA. Great, and now I'll turn it over to Paula.
All right, thank you, Sarah. And I'm going to talk now about the application components and, most important, those deadlines. Next slide. Okay, this chart, you will see 2 key dates in the far right, October 12th and November 9th. The first, on October 12th, by that date, if you plan to apply for a CMF award, you need to have submitted your SF 424 through grants.gov. As part of that, what you're doing is telling us that you are indeed interested in applying and that you tell us about how much, you estimate how much you will be requesting in terms of an award. You are not obligated to actually submit an award, but you must have done this before you are eligible to submit an award by November 9th. And if you change your mind on the amount that you're going to request, that's flexible also. But that October 12th date is important for you to get your SF 424 in. Also by October 12th, you need to have created an account. You'll need your EIN and your DUNS number for that. You do this electronically through our awards management information system, which we call AMIS. Now, the actual final deadline for submission of the application is November 9th. And all the applications are online, and you do that through the AMIS system as well. So the open period, we opened on September 9th, and we will close on November 9th. We expect that we'll be able to announce awards probably in the spring of next year. And I also want to note that the last day to contact us with any questions you may have related to your application is November 4th. Anything that comes in after that, we won't be able to answer you until after the deadline. Next slide. So here's an overview of the application. The parts include, first of all, you will tell us about your organization, you'll give us application information, and then there are the next 3 parts are all narratives. Part 1 is your business strategy and your leveraging strategy. Part 2, you'll tell us about the community impact that you intend to have. And part 3, you will tell us about your organizational capacity. There's a series of appendices, and they're related to the narrative sections above, as well as some additional forms and certifications that you will need to complete. And there are several attachments that are required as part of the application, for example, audited financial statements. All of this must be completed in order to be considered a complete application. Next slide. So how do we score the applications? Well, there are really 2 phases. The first one we call external review and quantitative assessment. And you can see the point system we use for that. We use, for each application, 2 external reviewers. They are subject matter experts, and they will review your application and score it. Once that step is done, we move into phase 2, and roughly the top 50% of applications move on to phase 2, but we do it proportional to the applicant type. So we try to reflect the percentage of developers that have submitted applications and the percentage of financing entities that have submitted applications. That is then reviewed internally, and we take into account your final external review score, that score from phase 1. We look at your alignment with the CMF statutory and policy priorities. We assess the overall quality of your strategy, and we evaluate your organizational capacity and your financial health. Next page. So this is the application guidance for a financing entity approach, and Eddie will take it here.
Excellent. Thank you so much, Paula. And one other item I just wanted to emphasize regarding the SF424 deadline before I get into this section is make sure that the EIN and the DUNS number on the SF424 match the EIN and the DUNS number on the AMIS org accounts. Those numbers must match in order for you to apply. Make sure you're selecting the correct entity to apply to, because the EIN and the DUNS must be for the applicant entity, not for another affiliate. So it is extremely important that that information is correct. Okay, so let's talk a little bit about the organization and application information, which is found in questions 1 through 8. In this section, you will provide organizational information, contact information. You will request and indicate the amount of your CMF award request, your requested CMF service area. There are a number of questions regarding the eligibility criteria that you will need to answer, affiliate information, if applicable, and a summary of your CMF strategy. Please note that information in this section is largely informational and is not specifically scored unless noted in the application guidance. So let's talk a little bit about question 3. In question 3 of the application, you will select your service area type, and there are 2 options. You can choose a statewide service area, or you can choose a multi-state service area. So if you plan to conduct your CMF activities in a single state or a single territory, you will need to select statewide service area. If you plan to serve more than a single state or a state and another territory, then you will need to select a multi-state service area. And it is limited up to 15 states or territories, so you cannot exceed that amount. So the states that you select in question 3 will be used to determine your awarded service area. And one thing to note is that if you're selected for an award in this round, recipients will be allowed to use up to 15% of the award outside of the approved service area, and program income can be reinvested anywhere in the U.S. So that is a change from previous rounds. You may be held to funding projects in all or a portion of the states that you propose. So make sure that you're comfortable supporting at least one project in each state that you select. And the service area for which you're approved may be smaller than what you propose, and it's subject to the overall need for geographic diversity for the CMF program. So as Paula mentioned earlier, applicants will score more favorably if they propose to serve American Samoa, Guam, the Northern Mariana Islands, or the U.S. Virgin Islands. Okay, let's talk about business and leveraging strategy. It's the first of the 3 sections in the application. And in this section, applicants are asked to describe the needs of communities and people that will be served with the CMF award, as well as the extent to which the proposed strategy addresses those needs. You're also asked to describe affordable housing, economic development, and financing gaps that are addressed by the business strategy, the proposed strategy, as well as the projected CMF activities and track record, the role that CMF will play in project financing strategy, and the strategy for leveraging private capital with the CMF award, and in addition, the strategy for leveraging the CMF award at the enterprise level through reinvestment and or at the project level as applicable. Okay, so let's talk a little bit more about these questions in business and leveraging strategy. Question 9 covers eligible activities, financing activities, and proposed uses. So question 9A will focus on the eligible activities. And please note that based on your selection in 9A, you will be restricted in the assistance agreement based on the options that you've selected. In question 9B, you will indicate the financing activities that will be financed with the CMF award and any program income earned during the 5-year investment period. Applicants will not be held to these selections in the assistance agreement, so you do have considerable flexibility in terms of the financing activities. Last but not least, in question 9C, you will indicate the proposed uses, and the application will generate applicable questions based on your selection for homeownership, rental housing, and or economic development activities. Applicants will not be held to the specific uses in 9C, for example, development or rehab, but they will be held to the chosen activity type of homeownership, rental housing, and or economic development activities in the assistance agreement. So it's important to select appropriate options in question 9. Okay, so let's talk about the next question, question 10, which focuses on the community analysis and financing gaps. In this question, you're asked to describe the nature and the extent of affordable housing needs and your vision for addressing the needs. And if applicable, the economic development needs as well. You're also asked to discuss financing gaps. So here, make sure that you're addressing financing that is missing or is not available at appropriate rates and terms, and this is question 10B. An applicant will score more favorably if it clearly aligns the proposed CMF award activities with the identified affordable housing needs. So everything should align here. And information that you're presenting in the narrative should be supported by relevant data. Okay, let's talk a little bit about question 11. Question 11 focuses on proposed CMF award financing activities. And there are 4 components to this question. In question 11B, you're asked to describe the narrative. The narrative should tie everything together, and it should indicate how the activities that you plan to implement and undertake address the needs and financing gaps in your specific market. You should clearly describe how the CMF award will be delivered to the project, for example, through a grant or a loan, and what phase of project financing it will support. Financing strategy narrative should also discuss the financing activities and products that are in Appendix 1. We're going to talk about Appendix 1 in a few seconds. In question 11C, secondary market activity, if applicable, describe the anticipated transactions and how all CMF requirements will remain in place. So if this question is not applicable, then simply type not applicable. In question 11D, this is another question. If applicable, you will need to describe the strategy and the structure and the role of the CMF award. This question will only appear if you're proposing a loan loss reserve or a loan guarantee in question 9A. So based on your selection in 9A, question 11D will either populate or not populate. So I mentioned Appendix 1 earlier. Financing strategy narrative should discuss the financing activities and products table in Appendix 1. In this table, the applicant will provide data for each product planned to be offered with the CMF award. So now I'm going to turn it over to Sarah to walk us through the next part of the presentation.
Thanks, Eddie. All right, so now let's turn to track record. So that is the focus of question 12. And you'll start with describing your track record relevant to your proposed financial products and activities, which you list in question 11. And you'll discuss your experience serving that proposed service area and undertaking similar activities. This narrative should support the projections in scale and scope, and it should discuss the track record tables that you'll have in Appendix 2, which we'll talk a little bit more about in just a minute. One note here, applicants should rely on their own track record, and they should not include activities of affiliates that are not subsidiaries, and they should not include any affiliate who is also an applicant for the CMF 2021 NOFA. Next slide, please. So for question 13, this is where we're asking you to project your performance and pipeline. So in this question, you want to be sure to describe your activities and or projects so it's clear how a CMF award will be used and what outcomes are expected from that. To the extent you're undertaking a significant increase in activities compared to your track record, offering a new project, or serving a new market, be sure to describe what you are doing to ensure that this will be achievable. And your projections narrative should be supported by the projections table in Appendix 2. Again, we'll talk about in a moment. And just keep in mind, you're not required to have shovel-ready projects, but we want to see that you have a pipeline of projects or can easily build a pipeline. All CMF awards must be committed within 2 years, and all projects must be completed in 5 years. And the pipeline discussion for question 13 should be consistent with the project specifically identified in Appendix 3. Let's go to the next slide and talk about how to gain those most favorable points. So for both home ownership and rental, an applicant will score more favorably if its projected activities are achievable based on strategy and track record, and if it has a credible pipeline of projects or can demonstrate clear demand for its proposed financial products from borrowers. And finally, for projects proposed, it has financing sources committed, awarded, or funded. Next slide. So as we talked about in Appendix 2, this is where you'll enter both your track record and your projections. So in track record, that will be for tables A1, B1, and C1, you'll enter data on the applicant's track record of deployment and production, but keep in mind, based solely on the activities undertaken by the applicant, you do not want to include the activities of affiliates that are not subsidiaries of the applicant. And then second, for the projection tables, those are tables A2, B2, and C2, you're going to enter the data on the applicant's projected deployment and production only related to its CMF award. And the projections in tables A2 and B2 will be used to determine a minimum number of units to be produced within the CMF award, and they will become a condition of the assistance agreement. And then one note here, tables C1 and C2 will only appear for applicants with a financing entity approach. Next slide. So we talked about the track record and pipeline. Appendix 3 is where you're going to list those specific projects in your pipeline. So in Appendix 3A, this is where you'll specifically list the projects. You'll include at least 2 and up to 8 projects unless you're capitalizing solely a home ownership program, then you'll only enter that one home ownership program. For pipelines that are exceeding 8 projects or where not all projects have yet been identified, you can provide an estimated aggregate cost information on those projects in the total for additional projects category. And the total eligible project costs in 3A must equal to question 14C, which is on leverage, and we'll talk about that on the next slide. So for appendix, let's go back one more slide. So for the second part, for appendix 3B, sources, this is where you're going to be talking about all the anticipated sources of capital needed to finance the pipeline provided in 3A. So 3A are the projects and 3B are the sources. And for this capital, you'll list it by status. So you'll put sources secured or received or anticipated projected, as well as by source, either early stage or permanent. And again, we do have a few things where we try to have that math equal up. The net sources at the bottom of Appendix 3B must equal the eligible project cost in Appendix 3A, which will equal the eligible project cost in 14C. So now let's go to that next slide. So question 14 is on leverage, and a few important reminders on leverage, what we talked about at the beginning of the project. The overall amount leveraged by your CMF award is determined based on the total eligible project cost for projects financed and supported by the award. And guidance on what counts as an eligible project cost can be found in the application frequently asked questions. And keep in mind the total EPCs for a project won't exceed the total development cost for that project. So question 14 asks you to provide that overall leverage summary. You're going to enter the total eligible project cost that will be supported by the CMF award in 14C, and then the projected leverage cost will be auto-calculated by subtracting the CMF award. And then you'll enter the amount of leverage cost that will be generated from private sources and public sources in 14F and G. Okay, and we can go to the next slide. And then from there, you're going to be showing your leverage in these different categories. So again, let's start again with enterprise level leverage. That's question 15. And first, what you'll do is separate these from private and public sources, 15A and 15B. And if your organization does not intend to use enterprise level capital, you simply enter 0 for both of those fields. In 15D, you'll discuss your strategy to attract this type of enterprise level capital, particularly private capital. And in 15E, you'll discuss your prior track record in raising and deploying funds from sources you're targeting for enterprise level capital. And then in Appendix 4, this is where you'll identify those potential sources of enterprise level capital. But if you are entering 0 on 15A and B, then Appendix 4 will not appear because you're not proposing any enterprise level capital. Go to the next slide. So question 16 is on the next type of leverage, reinvestment. So you'll indicate whether you plan to reinvest any of the CMF award proceeds or enterprise level capital during the 5-year investment period in questions 16A, B, and C. And again, if you're not going to be using this as a part of your CMF application, simply enter 0 for these questions. Just be aware if your strategy involves short-term lending or investment that will generate repayment of principal or equity from your initial deployment of the CMF award during the first 5 years, you will be required to reinvest these funds as they're considered program income. But you should only include projected reinvestments for projects that will be completed within the 5-year investment period when completed question 16. So if your CMF strategy does involve reinvestment, in 16D, you'll indicate how much you intend to reinvest each year during the 5-year investment period, and it'll say year 1, year 2, you'll fill out it per those 5 years. In 16E, this is where you'll discuss your strategy for reinvesting your CMF award and enterprise level capital. In 16F, you'll describe that track record of managing repayment and reinvesting capital. Next slide. And finally, our last type of leverage, project level leverage. And again, similarly to the other types of leverage, for 17A and B, you will separate private sources from public sources. And if you're not proposing to use public project level leverage, enter 0. For question 17D, you'll describe your approach to attracting project level capital and identify the likely sources. And then for 17E, again, you'll discuss your track record of providing financing at the project level, quantifying the amount. And then switching gears, for question 17, this is where we're going to ask you about your adaptability. We'll discuss your track record in adjusting strategy or pipeline due to changing market conditions, availability or cost of capital, or other external pressures, including the cost of anticipated pipeline projects, changes to interest rates, availability, and the cost of capital. Next slide. So the summary, an applicant will be given more favorable consideration if it, first, identifies affordable housing needs and financing gaps and aligns its proposed CMF activities and products to meet them. 2, demonstrates its strategy and activities will result in more favorable financing rates and terms. 3, demonstrates that its proposed activities are achievable based on the applicant's track record. 4, describes a clear process for selecting projects that need CMF support. 5, has a credible pipeline of projects or can demonstrate clear demand for its proposed financial products from borrowers. And finally, has a clear strategy for and track record of leveraging, particularly private capital. All right, and next I will hand it over to Paula.
Thank you, Sarah. Now I'm going to talk about part 2, which is community impact. So in this part of the application, we're going to ask you to describe your strategy and how that leads to the impacts that have been referenced in the application. So we want to hear about your strategy and your track record of financing housing that's targeted to low-income families for home ownership and very low-income families for rental. We want to hear about your plans for financing affordable housing in areas of economic distress or high opportunity areas, your community engagement and partnerships, and if you're doing economic development, we want to hear about your strategy and track record of financing EDA and how those activities are going to fit within a concerted strategy and will benefit the residents of nearby affordable housing. Next slide. So in question 19, we are talking about community impacts. The CDFI fund is focused on ensuring that our funds have a significant and a lasting impact on the communities where they are invested. So we ask applicants to indicate which of the listed impacts will result from an award and then talk about the strategy for achieving that impact. You need to select at least one and up to 3 of the 6 identified affordable housing impacts. And if you're doing economic development, there are 2 identified impacts, and you need to select one or you may select both. So for each housing or economic development impact that you select, you need to also identify relevant metrics and tell us about your plan for tracking the metrics. We have a list of metrics that you can choose from, but you can also identify your own. Next slide. So on question 19A, you can see these are the 6 affordable housing impacts, and they range from improving financial stability and wealth building to improved health outcomes for low-income individuals and families, creating opportunities for low-income residents to avoid being dislocated and to be able to stay in their homes and their neighborhoods, improved access to educational opportunities or transportation, to assist in the long-term recovery and rebuilding of affordable housing in disaster areas through either disaster prevention or disaster-resistant design. And 6 is to increase the home ownership rate for populations that have lower than average rates of home ownership. 19C, this lists the economic development impacts you may choose from. The first is to increase access to goods or services for low-income families. And the second is increased economic opportunities for low-income families, especially those in areas of economic distress and the most vulnerable. Next slide. Question 20, we're talking about areas of economic distress and the high opportunity areas. These, as we've been discussing, are priorities this year for rental housing. But I do want to emphasize that you're not required to do any or all of your activities in AEDs or high opportunity areas. But you would score more favorably if you did. We are looking for rental applicants that present a strong ability to support affordable housing in AEDs or HOAs and propose a larger percentage of units in those areas, and those applications will score more favorably. Now, we've talked about a lot of different areas, and you don't have to do a lot of research on this because we have the data sets for you that are on our website. You can find census tracts that are designated as areas of economic distress, rural, high opportunity areas, low income areas, and the like. So there is a link on this page to where to find those data sets. Next slide. On question 20, these are the definitions for areas of economic distress and high opportunity areas. I'm not going to read them, but for areas of economic distress, you can see that there are a variety of ways a census tract might qualify as an AED. High opportunity areas, these are new to us this year, and so we are relying on the definition and the data that's used by the Federal Housing Finance Agency, FHFA, and we will use those in our data set for census tracts that are considered high opportunity areas. In general, you're probably familiar with this concept. Many states have high opportunity areas in their QAPs. These areas have lower poverty rates. They tend to have better schools, more job opportunities, and the like. Next slide. So in terms of income targeting, as we've talked about, generating rental housing for low-income families, 50% AMI and below is a priority. Now, we will ask you for your minimum percentage of, that you will commit to very low-income families. And I want to make sure that you're very comfortable with the number that you put in there because it will become a performance goal in your assistance agreement. So in question 21B, we are asking you, well, if that's the percentage you're committing to, how are you going to achieve that percentage based on the strategy that you have and based on your track record of producing housing for very low-income families? So it's important that you put a number in that you feel that is achievable because you will be reviewed based on that. Now, applications will score more favorably in this category if the applicant commits that 45% or more of the total CMF rental portfolio will be set aside for very low-income families, and that you demonstrate that these percentages are achievable based on your strategy and your track record. Now, serving less than 45% very low income is certainly fine, but it's just that you will not be scored as high on this question. Okay, next slide, and I am turning this over to Eddie.
Thank you so much, Paula. So let's talk a little bit about homeownership, which is question 22. If you're not proposing homeownership, this question will not appear for you. So generating homeownership housing for low-income families is a priority for the CMF program. So there are a number of sub-questions here. First, in question 22A, you are asked to enter the percentage of your homeownership units that will be located in areas of economic distress for eligible income families, so up to 120% AMI. So, and when we're talking about homeownership units, we're talking about the CMF homeownership units that will be supported with this CMF award. In the next question, question 22B, you're asked to enter the percentage of your CMF homeownership units that will be targeted to low-income families. So that's 80% of AMI or below. The next question, question 22C, asks you to enter the percentage of the CMF homeownership units that are located in an area of economic distress or targeted to low-income families. Please note that this will become a performance goal in the assistance agreement, so what you propose has to be achievable, and applicants where 100% of homeownership units are either located in an area of economic distress or targeted to low-income families will be scored more favorably for this question. If a CMF homeownership unit is located in an area of economic distress and at the same time it's targeted to low-income families, do not double count in the percentage total. In question 22D, you're asked to describe how you will be able to achieve the percentage that you listed in question 22C based on your application strategy and experience. Okay, the next question, question 2023, focuses on community partnerships. And here we ask you to describe your partnerships with other organizations, for example, housing developers, lenders, community organizations, and how these partnerships will enhance your strategy and impact for low-income families and help to address priorities of the CDFI fund. Potential areas of partnership include, but are not limited to, facilitating supportive services for residents, allowing the applicant to reach new markets, significantly increasing production, or undertaking new activities, or facilitating and addressing priorities identified in the NOFA. Question 24 deals with economic development activities. It will only appear in application if you proposed economic development in question 9. And here it asks you to describe how the application will ensure how the applicant will ensure that its activities are certified as being part of a concerted strategy to stabilize or revitalize a low-income area or underserved rural area in conjunction with affordable housing. Concerted strategy means a formal planning document that demonstrates the connection between affordable housing activities and economic development activities. And also you're being asked to describe how the plan's economic development activities will serve nearby residents of affordable housing. Okay, the next question is question 25. It focuses on rural areas. Please note that applicants will score more favorably if they commit to investing at least 10% of the CMF award in rural areas and demonstrate a track record that supports that percentage. So in this round as before, we're using the same definition of rural area. That definition is from the Enterprise Duty to Serve Final Rule. Please be aware that applicants will be held to the percentage that they enter in question 25A as a condition of the assistance agreement. We do have a database, a data set that identifies whether each census tract is designated as rural or not, and you can access it on our website by going to step 2, apply. There's a hyperlink at the bottom, and you can also use our SIMS mapping tool, which visually shows which census tract are rural as well. It's the same data as the data set. Okay, so in summary, an applicant will be given more favorable consideration in this section if it demonstrates a clear strategy for achieving the selected affordable housing and or economic development activity impacts and presents a clear and effective plan to track metrics that are related to the relevant outcomes. If it demonstrates a clear and compelling strategy for financing and or supporting housing units targeted to low-income families for homeownership and very low-income families for rental, as well as if it presents a strong ability and commitment to finance and or support affordable housing in areas of economic distress and or high opportunity areas. Applicants will also be given more favorable consideration and scoring if they propose economic development activities and demonstrate how the proposed activities fit within a concerted strategy and will benefit the residents of the nearby affordable housing. And last but not least, if they commit to investing at least 10% of the CMF award in rural areas and demonstrate a track record of serving rural areas. Now I'm going to turn it over to Paula to tackle the organizational capacity section.
Okay, this is part 3 and the last part of the application. So in this part of the application, we ask you to identify and describe your management team and the key staff, what their roles and their responsibilities will be in terms of managing a CMF award, your past experience in managing federal awards, and the financial health of your organization. And we also ask you to talk about your lending portfolio performance. And note that appendices 5 through 7 are associated with the organizational capacity section. Next slide. So the question 26 and appendix 5 deal with key personnel. So in question 26, we want you to discuss the roles and responsibilities of your key staff in managing the CMF award. You don't need to repeat the qualifications and the narratives in that question again in Appendix 5. Now, the roles and responsibilities should be appropriate to a financing entity, so those would be things like building a pipeline of projects, financing affordable housing or economic development activities, management, asset management, portfolio, construction loan management, and managing program compliance. In Appendix 5, you need to list the key personnel who are integral to managing a CMF award, and then we ask you for specific information on their experience and their expertise. Next slide. Question 27, we're asking you about your previous awards. Appendix 6 will pre-populate with past award information. On question 27B, and that's a narrative, we ask you to describe your experience in managing federal awards over the last 3 years. You should tell us about any noncompliance with a federal award or if you've had an OIG audit in the past 3 years. If you don't have federal award experience, tell us about experience that you may have from other entities, so particularly large monetary awards with substantial compliance requirements. This may be something through the state or a city or a foundation. So applicants will score more favorably if they demonstrate a strong ability to successfully manage federal awards based on prior experience. And in question 27D, we ask about your past CMF experience if you're a current or a past CMF recipient. You know, tell us about your progress in deploying your past CMF awards. Include how much you've been able to commit and disperse to projects and to borrowers, as well as projects that you have completed. Next slide. Question 28 asks about your financial health. So applicants should provide financial health information based on your audit findings, as well as a narrative focused on financial health for the 3 most recently completed fiscal years. If there are weaknesses, please explain those and tell us about how you're trying to improve any problem areas. Discuss any recent material changes to your financial health that are not reflected in the audited financial statements for the most recently completed fiscal year. And be sure that your narrative is consistent with and refers to the financial data that you're also presenting in Table D of Appendix 7. Applicants will generally score more favorably if they demonstrate strong financial health, and that includes strong capitalization, sound operating performance, strong liquidity, and favorable audit results. Next slide. So, looking also at your portfolio health. So, financing entities must describe their loan or equity portfolios. Tell us about key trends or changes in the portfolio for the 3 most recently completed fiscal year and the current fiscal year to date. Your narrative should be consistent with and refer to the loan portfolio data that's presented in Table E of Appendix 7. Make sure there's consistency there. Compare your performance with industry benchmarks, for example, your delinquency rate, net loan losses, and the like. Tell us about any weaknesses. Discuss how you are trying to improve those problem areas. Applicants will score more favorably if they demonstrate solid loan or investment portfolio performance, such as loan investment portfolio. Next slide. Appendix 7 is Tables D and E. Talk about your financial data and your loan portfolio tables. Appendix 7, Table D, provide your financial data as of the fiscal year end for the 3 most recently completed fiscal years. Data entered must be for the applicant and subsidiaries, if applicable, to not include data for affiliates that are not wholly controlled. The data entered should align with the audits that you've submitted for your 2 most recently completed fiscal years, and you've attached those to Appendix 8 of the application. And Appendix C, Table E, provides data on the applicant's loan investment portfolio maintained on the balance sheet for your 3 most recently completed fiscal year as of the date of the NOFA. Next slide. So in summary, an applicant will be given more favorable consideration in this part if you present strong qualifications of your key personnel with respect to their skills and experience in identifying investments, underwriting or developing similar projects, managing a portfolio of similar activities, and ensuring compliance with program requirements. Also, if you demonstrate success in administering federal awards or administering state or local government awards, foundation grants, or other programs that have complex compliance requirements. And more favorably, if you demonstrate strong financial health and you have favorable audit results and you present solid loan and equity portfolio performance. Next slide. This chart is helpful in order to tell you what you need to submit as far as your attachments. If you look to the far right, you'll see that there are certain items that are required for all applicants, but also there are some that are not required for CDFIs, for example. So hopefully you will, this will give you some guidance in how to prepare and submit your attachments. Next slide. And now I am turning back to Eddie, who's going to talk about resources and contacting the CMF team.
Thank you, Paula. So we're almost at the finish line. So let's talk a little bit about some additional resources and tools that you have at your disposal. So we have a lot of training resources on our website. If you click on Step 2, Apply, and specifically we encourage you to review the 2021 CMF pre-round outreach presentation, the 6 training modules that Paula talked about, the CMF interim rule, obviously the NOFA, application instructions, application FAQs. We have a glossary as well, and there's a data set that contains the census tracts and indicates whether they meet the criteria for economic distress, rural, high opportunity, and low income area. So all of those are extremely useful, and we encourage everyone to review before completing and submitting your application. So who can you contact if you have more specific questions? So it depends on the type of question and the topic. If you have questions related to the CMF application and the content of the CMF application, you should reach out to the CMF team by submitting a service request in AMIS, emailing us cmf@cdfi.tresh.gov, or calling 202-653-0421. If you have questions related to the CDFI certification status, compliance with previous awards or allocations, you should contact CCME staff, compliance folks. You can submit a service request. You can email them, ccme@cdfi.tresh.gov, or you can call. It's the same number, and there's going to be a menu, and you just select the option for CCME. Last but not least, if you have questions related to your AMIS account, setting up accounts, logging in, if you forget your password and you need to reset your AMIS account, you should reach out to the CDFI Fund IT Help Desk. The best way to reach them is through a service request, or email them at amis@cdfi.tresh.gov. You can also call them, but I would strongly encourage you to email them or submit a service request. They tend to respond much quicker that way. So if you do have a question and you would like to submit a service request, it's fairly simple. Here are the steps. You log into your AMIS account. You click on Service Request tab on the top, and then click on Create New Service Request button. Then you will select the Capital Magnet Fund for the program field, complete all of the required fields, and then press Submit. And we will respond usually within a day or so, either by email, through AMIS, or outside of AMIS. Okay, so that concludes the slide. So I think we can open it up to questions. I see 15 questions already, which is excellent. That's a lot of questions, so maybe I'll just start answering those questions, and then if folks want to ask a question on the phone, we will open up the phone lines in a few minutes. Maybe I'll try to get through some of these questions first, and then the operator can provide some reminders on how you can ask questions on the phone. So the first question that I see is someone is asking about how COVID impacted their financial situation, and how they should describe that in the application. So let me go back to, there's a slide that Paula talked about a few slides ago, and it's going to be right here. Question 28 focuses on the financial health. So this is where you should discuss any material changes to your financial health, and also discuss how the financial health is how it aligns with Table D in Appendix 7. So the narrative and the table should align here. I'm not sure I understand exactly the second part of this question regarding the housing budget. You might be referring to the total asset requirement for qualified nonprofits. If so, please reach out to us and we can provide some additional guidance on that. The second question is about the commitment deadlines. So as Paula mentioned, we are allowing recipients to choose whether they would like to receive a single lump sum payment or to select two payments. So if a recipient selects two payments, each portion of the payment must be committed within 2 years. And the second payment would be processed within 1 year of executing the assistance agreement. So in theory, that gives you an extra year for the portion that's in the second payment. So each portion still has to be committed within 2 years of receiving the payment. Hopefully that answered your question. If you'd like to follow up on more details, you can reach out to us, cmf@cdfi.tresh.gov. The next question that I see is someone is saying whether applicants applying as financing entities are allowed to include pipeline deals that are not arm's length, i.e. under development by an affiliate, in addition to arm's length deals. Okay, so I think there's maybe a few issues or a few moving parts with this question. So the first one is, it sounds like you would like to apply as a financing entity, but you also plan to maybe undertake some activities as a developer. If so, the entity approach that you should select is the one that would be the primary. So if most of the activities will be you will implement as a financing entity, you would select the financing entity approach. And then in terms of the affiliate and what should be included in the pipeline, so your pipeline should include anything that will be supported with the CMF award dollars. That should be your pipeline. And also please note that if an affiliate is applying in the same round, then they cannot play a role in executing your strategy. So that's another item that you do need to be aware of. So again, if you would like to follow up, you can email us. Hopefully that addressed your question.
Eddie, this is Paula, and just to add to your answer on that one, I do want to make it clear that affiliates, you may finance affiliates. If they have projects that are eligible projects, and you can enter into a written agreement with them, a legal agreement with them, that is allowed. So as Eddie says, there might be some more specifics about what you particularly have in mind, and we can help you with that. I just wanted to get that out. That's it.
Thank you, Paula. Yeah, and with some of these very specific questions, it's really better to email us because we really don't have the full picture. So, yeah, please email us or submit a service request, and we can provide a more precise answer based on your specific circumstances. Okay, somebody is asking if they're saying we're a financing entity, CDFI, who is also an affordable housing developer under CMF that's using a developer approach, hurt our organization. No, it would not hurt your organization. As we noted earlier, it's really based on your track record and how you intend to execute the CMF award. As long as you have a track record as a developer/manager, you can certainly select that entity approach. It's really up to you. It would not hurt you. Again, you would be evaluated based on the entity approach that you have selected. Okay, the next one is, does EDA need to be in conjunction with our own affordable housing activity, or could it be with other lenders and developers? Is there a time window? It does not have to be in conjunction with your own affordable housing activity. There does have to be nearby affordable housing, and it does have to benefit those residents of affordable housing. I'm not sure I understand the second part about, is there a time window? It's the same requirements for EDA as for rental and homeownership. You have a 5-year investment period. Everything has to be 100% of the work has to be committed within 2 years. You have to make an initial disbursement within 3 years, and then all projects have to be completed within 5 years of executing the agreement, and then there's a 10-year affordability period following the investment period. So I'm not sure which time period you're asking about, but please reach out to us if it's not clear. Somebody's asking a very specific question about shared appreciation equity. I think this is another example. Maybe we can follow up directly and provide a specific, a more precise answer. So I'm gonna just write down your name, and then we'll follow up after the webinar. Okay. Okay. The next question is about. It sounds like affordability requirements. So let me go back to the slide that I think you're referencing. The greater than 50% of the funds must be spent at 80% AMI and below, and I think it was slide 27 or somewhere around there. Give me 1 second, I'm going to find it. Okay, so I think this is what you're referring to, slide 23. So greater than 50% of the eligible project cost must be attributable to units that are low income and below. So 80% AMI and below. And then you mentioned in your question the 20% for rental units. So it's important to clarify this requirement. This is a project level requirement for rental. This is not a portfolio level requirement. So this is just at the project level. So there's no equivalent of that requirement for home ownership, which I think is what you're asking about. This is in the reg, this requirement, and it applies only to multifamily rental projects. Okay, next question that I see is, can we use CMF to finance projects that we ourselves are developing or that an affiliate is developing? Yes, you can. Yes, you can. Let's see. Keep getting more and more questions and keep scrolling more and more. Okay. Okay. For Appendix 3B, is there a funding source that will be prioritized for funding? Can you explain this new table and the impact it has on the scoring? We're not prioritizing specific sources over other sources in Appendix 3B. As we mentioned before, private leverage and the private leverage multiplier is an evaluation factor, so that is something that is being assessed during the review. So we look at the private leverage multiplier. But in terms of what specific source, one source is not prioritized over another source. But yeah, private sector leverage is a priority for CMF. Hopefully that answered your question. Are the slides available? If so, when can they be found? So as we mentioned earlier, this presentation, the recording and the slides should be available on our website probably tomorrow or Thursday. For the application webinar for developers and managers, that is already up. And also the AMOS demo that walks you through the technical steps of completing and submitting the application in AMOS, that recording is also on our website. If you go to Step 2, Apply, you will see there. Okay, the next question is, management letters are listed as being applicable to all applicants, confirming this is accurate for bank CDFI applicants. That is correct. If you've received a management letter in the last 2 years, then it is required to be submitted. If you have not submitted it, then you indicate that you have not received a management letter. The next question is about AED. Okay, so when we detail the number of units we've financed in AED, can we rely on the LIHTC qualified census tracts even if they're not included in the data set on your site? So only census tracts that are identified as area of economic distress will count. And if you think that there's an issue with the data set, please reach out to us. But that is the data source that we're going to use, and you should use in determining whether a specific tract meets the area of economic distress criteria. Okay, let's see. Okay, someone is asking, if you're developing 100% of homeownership units at 100% AMI or below in an AD, will you score well? Yes, for that specific question, you will score well, yes. I can't speak for the rest of the application, but in terms of the AED and income targeting for homeownership, you will tend to score well. How do we know when our SF424 has been assigned to our CMF application? I have not received an agency tracking number. So as you submit SF424s, AMIS help desk uploads them on a regular basis. Usually takes 2 or 3 business days for the SF424 to be uploaded to AMIS, and when it's uploaded, you will be able to access it and pull it in the AMIS application. If it's been more than 3 business days and your application is not showing up, please email us or submit a service request, and we will look into it. In some cases, it could be an issue of the EIN or the DUNS not matching the SF424, which is how organizations get matched. So if it doesn't appear for whatever reason after 2 or 3 days of submission, just let us know, and we will work with you to resolve the issue. Okay, the next question is, I have observed that a property can be in both an AED and HOA. Which bucket should I put the property in or in both? Yes, that's correct. There are some census tracts, so this is specifically for rental that you're asking about. HOA only applies for rental. There are some census tracts that are located in both a high opportunity area and an area of economic distress. When you get to that question, the question that will ask you about what percentage of your rental units are located in areas of economic distress or high opportunity areas. As long as you're not double counting that unit, you don't want to count the same unit twice, even if it meets both criteria. So the unit would still count as meeting that criteria. It wouldn't necessarily give you any extra points to have census tracts located in both AED and HOA. So the NOFA criteria is whether the rental unit is located in an area of economic distress or a high opportunity area. So as long as you're hitting at least one of those criteria, you're fine. Okay, the next question is, can economic development activities be financed that are in conjunction with existing affordable housing activities that were not financed with CMF? Yes, they can. I think I answered this question. Concerted strategy. Are there any limitations that would limit your ability to do so based on the timing of the completion of the affordable housing, the income breakdown of the existing project, or some other factor? So maybe we can follow up on this question. Do you mind emailing us after the webinar? Because there are a few important things for economic development. I just want to make sure that we're all clear about what you're asking and what the requirements are for this. Okay, if you're financing a housing developer using CMF dollars, would you be able to count the cost of acquiring the property to be developed toward the eligible project cost if the acquisition was made before the onset of the CMF investment period? If yes, is there a time limit for counting these acquisition costs? That is a good question. So typically it's there's a 36-month look-back window as long as the project was not completed prior to the award announcement date, and that has been the case in the past. We expect this to be the case for this round as well. That's something that we can also confirm by email as well. How long is the process for CDFI certification? That's a great question for our CDFI certification colleagues. It does, I would say, it takes at least a month. It can take longer depending on a number of factors. But there is I'm going to go to that slide that has the information for certification over here. It's going to be second to last slide. This one right here. ccme@cdfi.tresh.gov or submit a request through AMIS. Certification is not something that usually can be done within a week or two. It usually does take some time. It's definitely a process, and sometimes they have follow-up questions, and our colleagues can provide you more information on the steps and the timeline. Okay, next question is, should projects in your pipeline be concrete, or are these intended to be just possible projects? They can be possible projects. Yeah, they can be projected projects. They don't have to be necessarily concrete. Okay, someone said thank you. I answered their question. Great. Can regulated CDFI submit call reports instead of audited financials? Yes. So that's in the NOFA. If you submit call reports to your regulator, you can submit those in lieu of the audited financials. That's fine. Okay, somebody's asking about the 15% rule. Does this mean we cannot ask for more than 15% of the $300 million? Yes, that is correct. So you cannot ask for more than $57 million, and that includes an aggregate with all of your affiliates. So if you have a number of affiliates applying in aggregate, you cannot request more than $57 million in this round. Okay, the next question is, so for the management letter, if we have not received one in the past 2 years, we do not need to include a statement in lieu. I think in AMIS, you basically what you do is you just attach, you attach a document that states that you have not received a management letter in the past 2 years. But you do need to state that. And I think it's going to be required to submit in AMIS. Can EDA be in conjunction with nearby affordable housing that has been in existence for a substantial time, or does EDA need to be developed within a certain time period before or after the affordable housing? I'm not aware of any requirements for the affordable housing that has to be developed at a certain time. It does have to be located and physically proximate to the affordable housing, and it has to benefit low-income residents of that affordable housing. Hopefully that answered your question. Again, we're happy to provide more guidance if you want to email us or submit a service request. Okay, someone is asking about the specific audits that they need to submit. For that question, I would encourage you to email us so we can provide specific guidance based on your circumstances. The next question is, when breaking down the sources of pipeline projects, how do you define committed? A lot of pipeline projects do not have a financing secured today, but is not competitive source and is guaranteed. If the source is guaranteed, is it considered committed? So committed usually for our purposes, means that there's a written agreement. Paula, do you want to provide a little bit more on this question?
Yeah, what we are looking for is that you've secured those funds. You may not have them in hand, but you do have a commitment for them, and it's a binding commitment. So it's not, and I'm not sure what you mean by being guaranteed. Again, for the specifics, you could send us a service request or an email, and we could take a look at your specific situation. But for the most part, we're looking for committed. You can also put that it's not committed, and just make sure that you put it in that particular part of the table.
Okay, excellent. Thank you, Paula. The next question is, in the context of homeownership financing, what does targeted to low-income families mean? That means that you have recoupment and resale strategies to ensure affordability to, so in this case, low income would be 80% of AMI and below. So basically some mechanism to ensure that those homeownership units will be occupied by low-income families and below in case of a sale. Okay, the next question I see. Okay, I don't see any questions in the Q&A, so maybe we can open up the phone lines and see if there are any questions. Kristen, can you remind folks how to ask a question by phone on the line?
Absolutely. If you'd like to ask a question over the phone, please press *1. Please unmute your phone and record your name clearly when prompted. Your name is required to introduce your question. To cancel your request, please press *2.
While we're waiting, I just want to jump back to one question that you answered, Eddie, which was about the maximum 15% award to any one organization. While that is a statutory limit, it's very unlikely that someone would get a 15% of the entire award amount. We have to make sure that our funds are spread across the country, that they're in rural and metro areas, et cetera. And so, generally speaking, it's going to be somewhat lower than that. Although the award amounts we do expect to be higher than in the past.
Yeah, thank you, Paula. Yeah, that is just the requirement in terms of the award request. You cannot exceed it, but yeah, it's highly unlikely that awards would be made that are that high. Kristen, are there any questions on the line?
Not at this time.
Okay, and I'm not seeing any additional questions in the Q&A. Paula, would you like to wrap up and give some last-minute remarks?
Sure. Thanks, Eddie. And really, thank all of you for participating in this webinar. I know it's been a long one, but I hope it was a helpful one. And we've given you plenty of contact information, and the invitation is open to contact us if you have any questions, if there's anything we can be of help. And we're very excited about your interest in the program, and we really encourage you to apply. So thank you so much.